What is up, YouTube, and welcome back to another video on high altitude investing. In today's video, we are going to be talking about why I'm personally going short on Pepe and other coins. So let's get straight into this. Okay, let's get started. But before we do, make sure that you guys join the free Discord, link in the description box below. We've got a lot of awesome stuff in the Discord. I post free announcements. There's also, of course, the VIP areas when you're ready to take your trading and investing to the next level. And the free Discord is just a really great spot to learn a lot and to be part of a trading and investing community with over 2,000 other members. So let's talk a little bit about the S&P 500 first and foremost, and then we're going to get into a few different charts that I personally think are going to crash. So let's go ahead and open up the daily time frame here at the S&P 500. So a lot of people are FOMO buying the S&P 500 up here. A lot of people are really excited, thinking, oh, we're going to take off here. And I'm pretty skeptical of that happening. We do have bearish divergence on the S&P 500 here. You guys can see that while price is making a higher high, the indicator, the MACD, is making a lower high. So that's actually a really bearish signal, and it happens a lot near the tops, near short-term peaks on the S&P 500. One really great example of this would be back here in 2023. You can see that the price made a high and a higher high. A lot of people were FOMO buying up here. And of course, the indicator made a lower high. Now, this isn't super steep divergence. It's steeper than it was right here. We didn't have a lot of divergence right here, but it was there. And it led to a pretty big crash, considering all things. But this is actually a little bit steeper here that we're experiencing right now on the S&P 500 as far as divergence goes. So I would not be at all surprised to see a pullback here on the S&P 500. We do have a 90% correlation between the S&P 500 and cryptocurrency. So if this thing pulls back, don't expect your crypto to keep going up. The other thing, you guys, is there is the interest rate thing that everybody's talking about. Are we going to have a change in interest rates? Are we going to keep the same interest rates? And really, there's a 99% chance that we're going to keep the same interest rates, which is really bearish. If that is true, then the markets are going to pull back, and we'll know in a couple hours here. In fact, by the time this video is uploaded, depending on how long it takes my computer to export and everything, this might have already happened. Now, either way, there's going to be a significant increase in volatility as a result of this meeting. There's always an increase in volatility, so keep your eyes on this. You can just Google CME FedWatch tool, and it'll pop up on Google. So yeah, that's kind of the whole thing with the world markets and stocks. Let's go ahead and talk a little bit about crypto. We're going to go ahead and talk about Bitcoin first and foremost here. So really, you guys, a lot of people are bullish on Bitcoin right now. I'm seeing everybody freaking out. Oh, see, look, all the bears, they were so wrong. They're dumb, and all this kind of stuff about the bulls taking over on Bitcoin, which really, you guys, people are getting a little bit too excited too quickly. I'm short on Bitcoin right now. I opened a short right here, and I have a bigger picture short that I've been holding on a different account really since this area up here. And I'm short on Pepe, I'm short on Bitcoin, and I'll probably take some more shorts today depending on how things look over the next couple hours. So this to me is very, very typical. A lot of people, whenever the market starts to move down, a lot of people think, oh, okay, well, we must be starting to go down now. So everybody panic sells the dip. And of course, the market bounces back up and shakes everybody out again. They get all bullish, they buy back in, right at that point where the market has to turn back around and keep going lower. Now, if we look at Bitcoin versus gold, which is something I've been watching here for a minute, and one of the reasons I was able to predict the first part of this crash that I've been talking about on Bitcoin, a crash taking us down to 50K over the summer, is because of this gold fractal. There was other factors involved, the rising wedge pattern that we have as well on Bitcoin, and also just how much FOMO I was seeing in the markets. There was so much FOMO from so many different people. That's kind of how I knew the market was overextended. There was resistance, FOMO, and charts all telling me, you guys, people are getting too excited about Bitcoin. Well, Bitcoin has a tendency to follow gold. In fact, Bitcoin behaves just exactly like a commodity market behaves. So with Bitcoin here, you guys can see that Bitcoin is actually following the same human psychology as gold. It's the same exact human psychology, which is it's not anything to be surprised about. It's no surprise because of the very fact that people consider Bitcoin to be digital gold. And it trades a lot like a commodities market. In commodities markets, there's often extended fifth waves. So the 3-wave is big, but also the 5th wave is huge in commodity markets. And the same is true for crypto. So historically, crypto has traded a lot like commodity markets. And to see Bitcoin painting the same human psychology here as gold, this is no surprise, and this is something that definitely has happened historically multiple different times with Bitcoin. Even the bottom in 2018 was a perfect example of Bitcoin following the gold fractal. And if you go back here and take a look at what I'm talking about here, you guys will see that Bitcoin really did follow gold. It looked exactly like gold. Even back here in 2018, it was doing the same thing as gold. You just have to get your charts a little bit bigger here so you can see. So here's gold, and here's Bitcoin on the top. So Bitcoin has a history of doing the same exact psychology, the same trading patterns, the same human emotion, very, very, very similar fractals as gold. So don't be shocked if Bitcoin continues to follow gold and pulls back over the summer and does the same type of pattern as gold already did. Again, back to our other example, this is what gold did between 1970 and 2005. Bitcoin did the exact same pattern just between 2017 and 2020. So the timing, it's going to show the same fractals. It's just going to be faster on Bitcoin, and it's going to happen at a different time, which is exactly what we're seeing here with our Bitcoin and gold comparison. So don't be shocked if Bitcoin pulls back to 50K over the summer because we're overextended and there's so much FOMO, it's mind-boggling. Everybody was panicking. The amount of bearish charts went up just a little tiny bit when we started to get closer down here to wave 1. But that now today that there's a bounce, everybody's right back to being bullish again. And everybody's like, oh, we're just going to moon. I don't think so. I really don't think so. So I am short on Pepe right now. I'm short on Bitcoin, and I've opened a short on Pepe today, actually, and really expecting a pretty big pullback here on Pepe. And I was actually watching this exact level in the VIP area. If you look here on Pepe, I posted a chart, or in the VIP area, I posted a chart on Pepe telling everybody, hey, I expect Pepe to go up to 00013 and 00014 per Pepe in preparation for a pullback as the result of a fractal that I was looking at on Pepe. Now we pulled up to that level, so I'm going short right now on Pepe. It's nearing the exact area of resistance that I was expecting it to go in preparation for more downside. There's a bunch of resistance right here. I personally think this resistance is going to play out, that we're going to see a pullback here on Pepe and make a new local low. And there's a lot of support down here and a lot of resistance up here. So don't be shocked if Pepe rejects resistance and pulls back here and really comes back down to major support. So again, Bitcoin looks bearish. A lot of coins are overextended. A lot of people are all of a sudden bullish today. But the charts, the big picture setups on the charts are still showing, hey, you guys, there's a summer correction coming. Don't get too excited. Now, in the bigger picture, even bigger than what we're looking at here on the daily, then yeah, there's a big bull market set up for crypto. Crypto, after we correct, I think is going to go nuts. And people are going to make a ton of money on the upside again. And there's just a lot of coins right now that are overextended. I mean, look at ArcBlock. I've been telling people, hey, ArcBlock looks overextended. It's time to sell. Things are getting a little crazy here for quite some time. And it's really just fell off a cliff ever since then. And again, people are all of a sudden bullish. They're saying, oh, guys, look, we're going to go up. But really, ArcBlock right here is set up to do a perfect little bull trap here before we go lower. This is exactly what coins look like when they're overextended. They've gone significantly up in value, and yet people are still holding on. People are still thinking a big bull market is going to happen. And yes, a big bull market will happen again after a correction, all right, after we pull back. This thing went up 6,000% since its lows. That's the very definition of overextended, right? Bitcoin bounced a little bit today. These coins all follow each other. There's a little bit of a difference in timing. I think Bitcoin is going to start pulling back sooner rather than later. ArcBlock, it's been leading the crash. ArcBlock and Pepe have been leading the crash down. So they could, they can bounce a little bit here. Pepe is probably done bouncing, but ArcBlock could bounce up a little bit here before it goes lower. But don't be shocked if a bunch of coins start crashing and falling off a cliff, even though all of the internet is bullish, even though everybody thinks we're going to go up. This is topping structure here on ArcBlock, and to have a little right shoulder come up right here would be expected, but we really have painted a head and shoulders top, and even if you zoom in a little bit more, there was another head and shoulders top up here, which if you follow me on TradingView, I was telling people, hey, watch out, be careful, ArcBlock looks bearish, and I posted a short position, and it dropped off a cliff because of a head and shoulders pattern. Now another head and shoulders could pop up here. We have a left shoulder here, a head up here, and another little right shoulder could come up here, but it doesn't have to. If Bitcoin pulls back, this thing could just fall off a cliff further. All I'm telling you guys is that the bearishness in the charts and the probability of going down far exceeds any probability of us going up. The risk to reward favors selling, not buying up here. It's a seller's market. It looks bearish up here, and I really think that we're going to see a pretty big pullback in the crypto market. So just don't be shocked when things start to pull back and when people go, well, how did that happen? Was it manipulation? Was it this? Was it that? No. It was just the fact that we were overextended. We were at major resistance on a bunch of different coins, and a healthy correction is necessary. But people won't call it healthy because they won't predict it, right? They won't call a crash, and so they're going to think that it's the sky is falling and the world is ending right at the point where it's time to buy back again in the dip because they didn't call for a crash. So you just have to play the market as it is. See it for what it is. That's the best way to play this market. We have 5 waves up, We have wave A right here. We've started to make wave B. And I really think wave C, or we finished wave B, we're starting to make wave C. And I really think wave C is going to go into full force here with Solana before we go back up. And Solana is just one example. Even Ethereum has started to fall off a cliff here. It bounced a little bit, but we're at resistance right now. Don't get too excited just because of a little bounce that all of a sudden, oh, the bull market's back in force. I knew it was. No. Maybe the big picture bull market's still intact. I'm down with that. I'm okay with that idea. But in the short term, these coins could pull back. A lot of coins could pull back significantly. So again, I'm short. I'm short on Pepe and Bitcoin. I'll probably take more shorts today. Keep your eye on the volatility. Check out what happens with the Fed rates. There's a 99% chance nothing is going to change, which is really bearish. Summer corrections are common. Crypto has historically had summer corrections. It's just something that has happened a lot over the summer, is that crypto pulls back. So don't be surprised when resistance doesn't get broken through, and instead we reject on resistance and come back down to first support and then fail support and shake everybody out that has their stop loss on support or has their liquidation price at support, and then the market turns back around and goes up. Just don't be surprised. So that's my view on Bitcoin. No, I don't think this pump means we're just going to magically moon now. I think we're going to pull back. And yes, Ethereum's the same way, Solana, Pepe, even the S&P 500 I'm bearish on, right? So just don't get too excited, you guys. Keep your heads on straight. Play the market for what it is. And yeah, you guys, that's my personal view on the markets. Hey, thank you guys so much for tuning into today's video. If you enjoyed it and found it valuable, go ahead and do me a favor and share it with your friends. I love and appreciate every single one of you, and I look forward to seeing you guys in future videos. As always, stay profitable out there.